What's up guys, Bill here. In this video I'm going to go through inside day setups and kind of talk about all the different ways I play them. There's lots of variations and ways you can execute on this setup that are more than just your standard breakout or breakdown. And often, the market throws something at us with price action. Every day is different. And if you know some of these tips in different situations, different execution strategies, you can really make the most out of this inside day setup and start incorporating it into your trading style like I do. It's one of my favorite setups. So let's jump right in. Let's first talk about just the standard thing. I know most of you guys who have followed me for a while are pretty familiar with inside days, but just in case there's some new watchers out there, let's talk about what an inside day is really quickly and how to do the basic execution, okay? Looking here on the daily chart, this is where you find inside days. The best way to look for them is to use a scanner, and I'll link in the description a free website that you can go and scan for inside days every day. But essentially what happens on an inside day is price puts in a lower high and a higher low than the previous day. So you can see this little red doji candle here is an inside day. And what I do on these setups is I mark their previous day's high and low. And then those are my long and short triggers. So on a move over with confirmation of 54.30, that would be a long entry, and a move below 53.14 with confirmation would be a short entry. And I just use the 10-minute confirmation. So a 10-minute candle close, either above this level or below this level, I would enter a long or a short. It's as simple as that in its basic form, okay? But what we want to do is have some alternative methods to use these setups for in situations where the market is giving us a different look, okay? Because it's not always going to be as simple as you just play a breakdown and breakout, right? So the first thing I want to talk about is playing the range of an inside day when you have a thesis. And we're going to stick here with Uber, okay? As you can see, Uber gapped up here. It was a power earnings gap. And it's been strong ever since, right? It's in an uptrend. So by the time we get here and we put this inside day in, this is a nice strong uptrend. So for me, I would feel bullish about the stock Uber on this inside day. And so I want to potentially play the range. I'm willing to play a breakout, but I'm going to look to play the range because you just get a little bit of a cheaper entry, better risk to reward when you can play the range. So let's jump down to this day on the 16th on a shorter time frame. And I'll show you what I'm talking about here. Okay, so here's our range drawn, right? Previous day's high and low. And you'll notice that in pre-market, we're kind of chopping in between the range, but then right at open, we flush down and touch this level and test it. Playing the range, guys, what I mean is, if you have a bullish thesis, which we do on this stock because of its power earnings gap and the nice trend up, we would want to get in calls down here and have this great risk to reward where, we can still take advantage of a potential inside day breakout later in the day, but we're going to be well in profit before we even get there because we're buying on that pull to this range. And now these inside days, the range is very well respected. So we're going to take advantage of them kind of pushing price down a little bit to retest that previous day's low and getting calls here. Now, you can get in, you can wait for an actual touch. Okay. If you're playing weeklies, you might want to do that, especially if it's towards the end of the week, because you want to nail your entry as much as possible. If you're playing like 1 day or 0 DT expiration contracts, you got to be a little more picky and wait to get real close to your risk level, right? My risk level, if we flush below this level and close a candle, especially on a higher time frame, like a 10-minute, I would consider that a loss of this level, and I would be out of the trade. But if we can bounce here and move up, then it's going to be a nice win. But with those 0 DTEs, if you enter up here, by the time you're down here, you're already probably down 20% or so, and you're already thinking to yourself, man, should I cut, right? Before you even really get to test the support here. So, you can wait for the touch, but you can also, if let's say the lowest it got was like right here, don't let perfect be the enemy of great. Buy a couple weeks of time on your contracts, and you don't have to actually ever really get the touch because you're not always going to get the touch. Okay. And I'll show you an example of that. Let's check out shop. On the 17th, here's your inside day on the 16th, right? So we would mark the high and the low. Get down to that 10-minute, go check out the 17th. You can see here, it's kind of the same idea, right? In pre-market, we're kind of in the middle of range. We push up and then we flush, but we don't ever quite get down to the bottom. But if I was, playing shop and I was really bullish, and it's kind of the same idea as Uber, it was a peg trending up, right? With nice support of the EMAs and everything like that. I'm looking for any type of off the open, any type of little sell that I can get in here near this level, but it doesn't have to touch. Like I mentioned, I'm going to buy a couple weeks on my contracts, at least 1 week, and then I can get in down here. And this can still be my risk, and I'm not fretting and getting ready to cut down here, down 20% already. It's going to have to come all the way down here to really stop me out, right? And you get the nice move up through the range and, through it and all the way up to 69 there. So you get, a $2 move. And you don't even have to worry about the breakout. See, if we're looking at the breakout, you get this 10-minute close, but it's kind of fakey, pulls back, and then it pumps back up again. You might get chopped up here after this big move up all the way through the range, trying to just play the breakout. So this is why I like to play the range of inside days when I have a thesis. If I'm bullish on a stock, I'd much rather them sell it off a little bit early in the morning to get a nice entry. And then if I get the breakout, that's just extra. I'm already up 50% here. And this is just, getting that bagger, right? I don't need this breakout to happen. So even in choppy conditions, low volume days, which we're getting a lot recently because of holidays and things like that, and the big move up we've had over the last couple of weeks, need time for that market to digest that. You're going to get a lot of, choppier low range days when you can get pulls, to the bottom of the range if you're long or the top of the range if you want to go short. That's just a great way to play these setups and not always have to rely on the breakouts and breakdowns, which always, they're not always going to hit based on the conditions of the market. Okay. Another way to play inside days is what I call a momentum entry. And this also, it doesn't, I guess, necessarily require a thesis, but you're going to benefit from having a thesis on this type of setup. And what I do on these setups, if we look at D-Dog from 1120, let's see, we'll see the inside day here formed on the 17th, really small inside day. And this is another power earnings gap setup, right? Gapped up on earnings, broke out of a flag, and now we're starting to flag again. And so to me, this is a bullish setup. I love these pegs during earnings season. 4 times a year you get to play these. These are great guys. I have a video on them. If you haven't seen that video, check it out. But we're going to go look at the 20th. And this is something I would come into the day, inside day setup, but I'm very bullish on. And we can see that we're going to open really close to our level here. Right at 110 was our high from the previous day. You can see there. So that's our, breakout level. And we're chopping around it in pre-market. D-Dog's kind of a lower volume stock, a little spreadier. So you see these kind of weird candles in pre-market. And look what happens on that last candle in pre-market. Big wick down, which kind of screams bullish to me. And then we get a little sell. But I don't really have any main level here, and it's nowhere necessarily near the bottom of the range. It's kind of close, right? But not super close. So what I'm looking for is I'm going to play a momentum entry. As soon as we start to push through this level, I'm going to take calls. There's no confirmation here. You're just taking the push through and trying to get calls as soon as you see this candle start to push over 110. All right. And as you can see, you get a nice strong move. And the greatest part about this is, obviously you're scaling all the way. I actually played this setup. I was looking for 111 to scale just because it's a whole number and I didn't have any other major levels here. And then you can see if this level will end up holding, because this is your inside day level, right? Inside day high. So this candle closes and confirms the breakout, but it's way up here, right? It's a little extended. If you hadn't taken the momentum entry, you're probably you shouldn't buy calls here because you're going to have to eat that whole pullback if it does happen. Now, obviously it could have just kept, ripping up that day, but that's kind of rare, right? So you're in up here, you're taking a bunch of profit already, you already got a dollar move, it's a great off the open trade, and now you can kind of relax, and let's see if this level holds. This is your inside day breakout level. It does. Even though we pull all the way back here and give back half the move, it holds, and it's choppy, and there's wicks up and everything, and it starts to flag, and you pay attention, right? You watch your position, you watch the volume, you don't watch your P&L, you watch the candles, you watch the volume, you pay attention to the chart, you play the chart, not your P&L, and you see that this is a low volume flag, and then eventually volume comes back in, and what happens? We break out of the flag, and we continue on, and we hit another target. But that's the momentum entry, and it can be played long side or short side, but the whole key is you want price to open and be flirting around with the level in pre-market and then open right around it. So it opens pretty close to it and immediately starts pushing up. You take the entry on the push over. And yes, this is a riskier setup. I wouldn't go full size on this, and I'd be entering some type of hard stop as soon as I get in, just in case, because this is a pivotal level, previous day's high, it could wick up here and fail, right? It could reject it and fail. So you don't want to oversize, and you want to make sure you're ready to stop, and you're taking 25%, 30% hard stop, something like that, something reasonable, that when you get the pop, you'll easily, make twice as much as that. All right. That's your momentum entry. Another strategy to play with inside days is what I like to call the fail and front run. And we're going to look at, Rivian here from 11/24. That was Friday. See, we had the inside day here, high day, low day. Let's go down to the 10-minute chart. Okay. Now, the fail and front run is a strategy I like to use when I may not have caught the move from the bottom, but I like the way the stock's moving, and I'm looking to play the breakout or breakdown, but I have a feeling that because it's already spanned so much of the range that it's going to have a little trouble breaking out right away. And so, as you can see here on Rivian, it flushes down to the bottom of the range and then gets bought up and makes its way all the way back to the range, top of the range, and then confirms a 10-minute candle. Now, you can jump in right here in the traditional way of playing a breakout on an inside day strategy. But because I just saw it come all the way through the range, I'm not going to enter here. What I'm going to do most of the time is look at my EMAs, wait for it to fail, and pull back to the 9 EMAs as my support, and then enter. And then try to be ahead of the eventual breakout and confirmation and trend continue. The fail, right? We close 10 over, then right back under. That's a failed inside day breakout, the way I play it. And the front run. We're getting in down here at the EMAs to front run the next try for price to push through the previous day's high and potentially make a move higher, which we can see Rivian does here. I like the EMAs. You can also, maybe there's a big level somewhere down here that you like, or it's opening range high, or it's a GEX or dark pool level or something, that you think price could fail here, maybe pull back to this level, I'll hop in. I like the EMAs. It works good for me as like a buffer on these breakouts. Once you've got a nice move from one side of the range to the other, it's traveled a ways, it's kind of tired, it needs to chill for a little bit. Let's let it confirm and fail, and then hop in somewhere that we like support for that next leg up, okay? That's the fail and front run. Next, there's days we get gap ups, right? Gap ups and gap downs, and following inside days, this is common because inside days, consolidation precedes continuation. A lot of times that continuation will happen overnight or in pre-market, and it kind of quote unquote will ruin your setup. But sometimes what you can do is just look for the retest of your breakout level. So whether it's a breakout or breakdown, let's look at SPY. On 11/21, it was an inside day, and it's kind of hard to see this, guys. I'm sorry, because I have so many lines on the chart. But on the 21st, it was an inside day, little tiny doji, and then we gapped up. Okay? So on the 21st, on the 22nd, let's look at the 10-minute chart. Ignore these purple lines because that's another day. That's going into Monday. But as we can see here, oh, you know what? Actually, I'm sorry. Weeble's a little weird. This is not actually the high from that day. So I'm going to go mark it. And just so it's easier for you guys to see, I'm going to delete the actual lines from today or from Friday. And the high was 454.13. Okay. Back to the 22nd now on the 10-minute. All right. There's your previous day's high. You can see that we're gapping up in pre-market. We're grinding up and then even bigger stick right off the open, okay? That immediately sells off. But we're pretty extended. We're over $2 away from our previous day's high where we would want to have, opened down here and broke out and confirmed and left, but they gapped up. So what are we looking to do? We're looking for a retest and a bounce from this previous day's high. And that's exactly what we get. Yeah, it dips down a little bit, but we have this GEX level here and it holds and it just creates this little 13-cent zone. And the way you can execute these really is kind of up to you, right? On a move that's come this far already on a sell-off, I'm cool with just buying a touch, all right? But you can wait for the close and the regain of the level. You could flip to a different time frame, see if this wicks and wicks, wicks under wick closes over. Maybe on the 15 it did. You could buy it on the approach if you're really sure it's going to hold. But you can see here that it only moved down about what at the most 24 cents away from our risk level here, and then you get a nice $1.50 move up. So if you are playing inside days and you get a gap up or gap down, look for that pop or pull back to either your previous day's high or low for a nice play, potential for a bounce. Okay. Lastly, there's the double inside day. So basically it's exactly what we're talking about now, but the consolidation happens for 2 days where 2 candles close inside the previous candle. Now, some people get a little confused on these about where to mark the levels and stuff. So if we look at SE here, we'll see that we have a double inside day here. So here's your first candle. Here's your second, lower high, higher low. Here's your third, lower high, higher low. Some people wonder, do you still keep this level marked because this was your inside day and now you're inside that? No, you actually mark the most recent day's high and low. And this stock's been really consolidating. You can see that even the 4th day, we're just a few cents away from getting a triple inside day, which is really rare. And then we break, a nice breakout day above it. But you just play the double inside days any way, the same ways that I just detailed in all the different ways you can play the inside day, you can play the double inside day. The double inside day just means more consolidation and eventually, hopefully, a bigger, stronger move because of all that consolidation. You mark the high and the low of the most recent day, the double inside day. And that's your triggers, right? And your range as well, if you want to play the range. So that is my inside day masterclass with a bunch of different ways you can play this setup and incorporate it into your own trading style. Regardless of what the market throws at you, there's usually an answer somewhere in one of those situations, whether it's your standard execution, playing the range with a thesis, a momentum entry, the fail and front run, the gap and retest, and the double inside day. Hopefully that helps, guys. If you have any questions, just leave a comment or find me on Twitter and send me a message and I'll help you out.